Hi, I'm Shiv. I'm a New York realtor with Weichert. I specialize in short sales and foreclosures, and I have some important information to share with homeowners that are directly impacted by COVID-19 pandemic. I want to read two statements that were put out, one by New York State Financial Services and the other by FHA. First, the New York State Financial Services issued a new emergency regulation requiring New York regulated financial institutions to provide financial relief to New Yorkers who demonstrate financial hardship from the COVID-19 pandemic. According to the FHA, those options include short and long-term forbearance options, mortgage modifications, and other payment relief options available based on the borrower's individual circumstances. What does all of this mean? This means, as a borrower, everybody's situation is different. And if you have been impacted by coronavirus and have lost income or your job, you need to contact your financial services for your home mortgage and start the process of discussing what your options are directly with them. Every home is different. Every homeowner's borrowing situation is different. Everybody's financial situation or circumstances are different. So you have to initiate the process. It's not something that's going to happen automatically. Now, I want to share a very important example of what forbearance or deferred means when it comes to a hardship that the homeowner might be facing, and the borrower is getting a forbearance from the financial services or the bank that they pay their mortgage to. So here's a very cutthroat, simple example that I want to share with you. Let's say a homeowner purchased a house in the year 2015, and the tag for this was $100,000. So in 2015, the monthly payment on this money that was borrowed for the house, the mortgage payment is $500. Fast forward to 2020, everything was fine till COVID-19 happened, and the borrower unfortunately lost his or her job. And now they're not able to keep up with their payments. Comes April, let's say they've figured out with their bank that they're gonna have a forbearance period of 3 months, which is 90 days. So that puts April, May, and June. That accumulates to $1,500. That's 500 multiplied by 3. That's 3 months, 90 days of not being able to make a payment. Comes July, they owe another 500. So what the bank's gonna do, or ask them, this is their unique situation, they've worked out this payment plan with the bank, saying 90 days later, I'll catch up with everything. What that means, the forbearance period ends after 90 days, which is June, and then now they're $1,500 plus 500, making it a complete $2,000. This is very important information. So let me explain it one more time very clearly. Let's say a homeowner bought a house for $100,000 in 2015. Their monthly mortgage payment is $500. And in 2020, due to this pandemic crisis, they have lost their income. Now, they were figured out with their bank saying, give me 90 days of time. I'm not going to pay any mortgage, but I'll catch up right after 90 days. So April, May, June, their 3 months of $500 monthly payment, the bank's going to put it into $1,500, and they're going to add another July payment of $500. So in July, they now don't owe $500, they owe $2,000. This situation of like this in 2008 put a lot of homeowners in foreclosure and short sales accumulated over time. So again, this is very important education for homeowners that are directly impacted by the pandemic of coronavirus, to understand that forbearance doesn't mean free money. Forbearance doesn't mean you're forgiven those 3 months of payment. It's going to be added on to your loan. Now, most of these banks or financial institutions won't push this payment for 30 years. So it doesn't mean they're going to add it at the back end of the mortgage of 2045 when it matures, you're going to have 3 more months. They generally don't do stuff like that. They want their money now as soon as possible. So maybe they'll defer it for 6 months, a year, based on your personal circumstances. Now, also a very important thing to note, that if you have savings in the bank account and are able to make your mortgage payment, you want to go ahead and do that. If the bank finds out that you didn't pay your mortgage, but you have $100,000 sitting in your savings account and you're deferring $1,500 payment, they're not going to accept that, and they would want to get every penny ASAP. So this is very important information that I'm sharing with you, and I hope this helps a lot of people not to fall into the category of deferred payment and getting like a balloon payment at the end and being caught in the financial hardships already, and then being able to pay a bigger amount and losing their home over all of this. I specialize in short sales and foreclosures. I see situations like these always happen, where once you fall behind, it gets very difficult to catch up. But again, the government is on our side. There's a lot of things that they're doing to help every one of us that is being directly affected by this pandemic. I'm in the state of New York. I'm directly affected. My business is affected. But all I can say is we got to stay positive, and we will get out of this situation. Together, we can, and we will. Please, in the description below, and as well as on my blog, I have given all the examples, and there's also content in there that you could use, links that are helpful to see what your bank is doing for your special situation. Like Citibank, Capital One, Bank of America, there are certain banks that are doing things differently. You would want to read that information and get more knowledge of what your circumstances and your situation can, and it will help you handle it better. Thank you very much for listening to this video. Please share, like, or comment. If you have any personal questions, you want to send it my way, there's also a Facebook Messenger link in the description, and you could directly contact me. Thank you very much. Have a great rest of the day. Stay safe, healthy, and happy.